Good morning and welcome to the First Tin PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors are being listen-only mode. Questions are encouraged and can be submitted anytime by the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and will publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to tangent you over to Thomas Bunga, CEO, and Charles Cannon-Brookes, Non-Executive Chairman. Good morning.
Good morning.
Good morning.
Good morning. Thanks very much, Paul. Very excited today to be able to present on the Investor Meets Company platform. My name is Charlie Cannon-Brookes. I'm a non-executive chairman of First Tin. I'm with Thomas Bunga, who's the company's CEO. And before we get going, I think, what is First Tin and what is First Tin's aspiration and USP? Well, First Tin aims to become an ethical and reliable tin supplier. We aim to fill the looming supply gap that we believe the industry is going to face from around 2025, which we believe will lead to significantly higher tin prices in the future. If I flip through, I assume everybody has no interest or has read the disclaimer, A or B, but on slide 3, that's a lot of happy smiling faces during the company's ringing the bell ceremony at the LSE. On the 8th of April 2022, a happy day for the company, a proud day for the company. We raised £20 million from investors. Probably nobody on this picture was fully aware of the challenges and headwinds that we would face in the coming weeks and months. But we're here today, Thomas and I, to reassure investors that we remain very confident about the company's prospects, as well as the tin market prospects in general. So the corporate highlights of First Tin. I mean, not many people know a huge amount about the tin market. It's a fairly small market in terms of compared to copper and some of the other base metals. Often referred to as the spice metal, tin is used in small amounts in all electronics, that be it your iPhone, your electric vehicle, solar panels, and it's an absolutely critical metal in the electrification of a more sustainable world. Currently, 97% of global tin supply comes from emerging and developing economies. That's the first thing I'd like to point out to investors and shareholders. 40% derives from artisanal and often small-scale mining practices, and the vast majority of supply comes overall from alluvial sources with highly unsustainable and environmentally damaging practices, and that's Indonesia, Myanmar, etc. The world desperately needs new, ethically sourced, sustainable sources of tin, and that's really where First Tin comes in. That's the reason we created this business. We have, as First Tin, 2 advanced low capex development assets sitting in tier 1 jurisdictions. These are hard rock assets, so no alluvial, no artisanal mining here. They're late stage. DFS studies have been completed on both assets or will be completed by the end of 2023. That's DFS and permitting. We deliberately picked the assets that we have because they have low capex and therefore low future equity requirements to execute the development strategy. Often you see in mining, companies with good assets, but small cap mining companies that really are unable to fund the large equity requirements. We've deliberately picked assets that have attractive economics, but also critically low capex requirements. Our assets have shown through third-party studies that they make money even at the current depressed tin price and have huge leverage to higher tin prices. They've had a lot of work done on them already. These are brownfield projects, likes of BHP and Newmont have worked on our assets before. And therefore, we benefited and can benefit from a significant amount of previous exploration work. They have mining licenses on both assets. And First Tin post the IPO has a very strong balance sheet, 18 million plus in cash today. And we are fully funded to complete 24,000 meters of drilling, both DFS studies and all permitting over the next 18 months for our 2 core assets. And those assets are Televisor in Germany and Taronga in Australia. So in summary, we have, as a company, high value, low capex assets in an OECD-based resource portfolio, and our assets benefit from significant infrastructure advantages. So I'm now going to hand over to Thomas to go into more detail on the company's portfolio.
Thank you very much, Charlie, and good morning to everybody from my side. My name is Thomas Bunga. I'm the CEO of First Tin, like Charlie already introduced myself. Looking onto the next slide, I have grouped the slides into 2 topics. What we have achieved already during the first half year in 2022, as well what we have planned for the next 18 months. So let's start with the achievements. We went public with our IPO at 8th of April, the actual year, and raised 20 million pounds. Charlie already mentioned nobody was aware about the headwinds. I'm happy that we really managed to raise the 20 million funds, which, by the way, enables us to finance all necessary activities to bring both flagship assets, Taronga in Australia as well as Televisor in Germany, into an investment ready status. We acquired by IPO Taronga, our flagship asset in Australia, one of the most advanced tin mining projects in the world, and one of the few ones beside Televisor that are mature enough to come into production until 2030, and it is represented by a very, very good mineralogy, enabling us for a very simple flowchart. And on top of that, we as well appointed a number of persons, so put in place 2 very operational teams that enables us really to develop both projects in parallel into investment ready status. What have we planned for the next 18 months? So we have commenced both DFS studies for Taronga as well as Televisor, and we plan to finish them until end of next year. We put the environmental permitting for Taronga and Televisor in process. So the process is running for Taronga, and the environmental pre-check even is submitted for the Televisor asset in Germany. And we expect to finalize the permitting procedures as well until end of next year. On top of that, we have commenced substantial drilling programs for our Taronga and our Televisor asset. We quite recently, last week, published a press release that we have started to drill at our Taronga asset, and we do as well a drilling program at our Televisor asset, and we quite recently finalized an exploration and drilling program for our Gottesberg project. Moving over to the next slide, talking about a few fundamentals of the market. With Televisor and Taronga, we have 2 very advanced projects, and there was a study done by the International Tin Association that identified only 11 tin projects that are mature enough to bring them into production until 2030. Out of the 11, 3 are in our hands, and Charlie already mentioned we picked our assets according to being very mature as well as very low capex. Looking onto the right side of the slide, that's at least the supply-demand comparison. What shows us that we are running into a wall of demand for tin, because the tin demand is driven by the change in energy generation, moving over to the more renewable energy, as well by electromobility and electronics. All of that have very high growth rates during the next years, driving us into a wall of demand that is by far not supported by supply so far, and we can't see how that will be. And we have planned to bring our assets into production during 2025, so kicking in particular where the gap between demand and supply is still very wide. What are the major markets? So we have seen mainly as well, it became aware once more during the last few months with the energy crisis in Europe, that there is that we are really now starting into the change of energy generation, energy supply, moving over to renewable energies. One of the example is photovoltaics, which, by the way, is as well a big consumer for tin, one of the big drivers with substantial growth rates forecasted until 2030, calling for substantial tin volumes. On top of that, the move to electromobility is another example where tin is consumed a lot. An electromobile contains roughly 3 to 4 times more tin than a combustion-driven mobile. That alone calls for an additional 55,000 tons of tin annually, looking onto a total market today of 380,000 tons, which is an incredible increase in tin demand, which is as well a good driver and a good support for our projects. Moving further, what do we have in hands? With Taronga, we have the 5th largest global tin reserve based on ITA assessment, and we have the 7th largest global tin resource in our hands. All in all, we are talking about 143,000 tons of tin content, chalk compliant for our 3 projects, for the 2 very advanced ones, Televisor and Taronga, and for a less advanced one, a second one in Germany called Gottesberg. So 143,000 tons, which alone for itself already stays for roughly 1/3 of an annual tin consumption in the world. Jumping over more on the details of the 2 projects, starting with our Televisor project in Germany. The project is situated around 250 kilometers south of Berlin in the federal state of Saxony, in former East Germany, close to the boundary of Czech. What is very special about the Televisor project? The Televisor project is sitting within a tin district with a very long mining history and a mining-friendly environment. It is represented by a very low capex case with $49 million pre-production capex and very low C1 cash cost of around 12,000 tons. So it's really a very solid business case. And here with the Televisor project, we are as well aiming to realize our leave no trace philosophy, so to keep all the mining waste underground, so to have a very small surface footprint. Jumping over, zooming into the district. So the green surrounded area is where we have mining license as well as exploration licenses. So the mining license is for the right-hand side, where you can read Breitenbrunn and Televisor, and red, the green, and yellow and blue bubbles are representing the surface projection of the ore bodies in the region. The Televisor project is the red, the yellow, and the blue one, so representing a very large surface mineable ore body. On the right-hand side, you will find as well the newest drill results from our Gottesberg exploration drilling. Gottesberg is situated on the left-hand side of the building, where we have intersects of 2.5 meters of 2.72 and 7 meters of 1.46% of tin, and in total 73 meters of 0.49% tin. So really interesting, high grade area that we identified, indicating that further resource drilling is necessary. Now having a look onto our Televisor project, on the right-hand side, the yellow and the blue lines represent the cut of the ore body, and as well showing that with Televisor we own not only a tin resource but a multi-metal ore body with a number of very interesting products. Besides tin, as well, we plan to produce a tin concentrate, and even more interesting, the critical raw material indium, which is as well part of electronics and fiber optics, so as well a critical raw material in Europe, and a very interesting one. Jumping over to the left-hand side, we have done a number of calculations with different tin prices, showing that even at $20,000 per ton of tin, we have still a very robust business case with an NPV of 82 million and 26% IRR, while the long-term forecast for the tin price is around $25,000 per ton of tin, where we talk about 173 million NPV and 43% IRR. Jumping further, what have we done in particular for the Televisor project? We commenced about 4 weeks ago a very big diamond drilling program with the aim to add further indicated resources to our existing inferred one. We expect first assay results during Q4 2022. We have commenced as well the DFS for Televisor with the German company DMT, and the completion is expected for end of next year, so quite in time as well, with our expectation to receive the permit. The EIA project is handed into authorities, and we even expect their decision during the actual year, which might bring us then into position to check further our option for fast tracking permitting. Moving over to Australia, to our Taronga project. Taronga is situated about 4 hours drive south of Brisbane in New South Wales. It is a very, very large ore body, and it is sitting in a region where until the mid of the 1980s has been tin mining. So all the alluvial material has been mined until 1985, and we are now develop the hard rock part of the tin asset. Taronga itself represents a very, very large tin ore body with a very simple mineralogy, with very coarse cassiterite minerals. Cassiterite is the tin containing mineral. We have here a slightly higher pre-production capex of $76 million compared to our Televisor case. Nevertheless, Taronga as well represents itself with very low C1 cash cost of only $14,000 per ton of tin, as well, leading to a very high IRR. There are major exploration upsides because the red blobs around Taronga represent as well tin mineral outcrops that our mineralogists, our geos already identify, and where we will put drilling program. Maybe there is an option to develop the Taronga project as well to a hub and spoke development for the adjacent ore bodies around our Taronga project. Taronga is a very simple hard rock ore body, so most probably the simplest available hard rock tin ore body in the world, with very coarse cassiterite, leading to a very simple processing flowchart. We have it's represented as well by a very large vein system, so it's a large ore body. Looking into particular into the Taronga project, so it is represented by a V shape, so a perfect shape for a future open pit that you can see on the right-hand side of the chart. We started already a drilling program for our Taronga project to do some twin drilling as well as step out exploration drilling as well. Looking onto the business case, some calculations on the left-hand side prove as well that the Taronga business case is a very solid one. Taronga as well is not only has not only a perfect V shape for an open pit as well, it is represented by a very, very low strip ratio of only being nearly being 1 to 1, waste rock to ore. What have we done so far? In particular, we started the DFS. We awarded the contract to Mincor, an Australian-based company that will do the job jointly with other companies, and we expect to complete the DFS until end of next year. Quite right at the same time where we expect to finalize the environmental impact assessment as well as the construction and operational permitting procedure. We have started a substantial drilling program at Taronga in order to do some twin drilling in order to validate the drilling results from the pre-visibility study that we inherited from the previous owner. But we as well have planned an extension drilling for Taronga in the middle part between the two ore bodies, as well to the southern direction where it is not yet finished. And we will do as well exploration drilling at Great Britain, one of the ore bodies very close to our Taronga project. We expect first results out of all those drilling activities until end of the year, beginning next year. We do not only talk about ESG compliance, it needs to be as well measured independently. So we submitted for that purpose an ESG audit to the company Digby, and we expect to finalize that within the next few weeks. And it's in the core of our heart to aim to have a very, very low carbon footprint, as well as to minimize the waste of our mining activities. As I told you, for our German Televisor project, we even plan to keep all the mining waste underground, so to have no waste dump, and in particular no tailing pond at the surface. And we have as well started already a joint study with one larger German lead smelting company, Ecobot, to do a study to investigate if we can have a very close tin smelter to our German project, so to limit the CO2 from logistic processes as well. We will do that study during the course of the next months. So far, the actuals for the two projects. Handing back to Charlie. You are on mute, Charlie.
Thanks, Thomas. So I think the chart on the left is self-explanatory. I think everybody who's been active in the markets in the last few months will know that commodities in general have been a tough place to be. I mean, tin is no exception. I mean, we listed the IPO that the spot price of tin was over $40,000 a ton. It's now just over $20,000 a ton. So the sector's been weak. No, there's no getting away from that. I think the chart on the left just shows that it's been weak for everyone. Cornish Metals has outperformed the sector. It recently received some institutional capital, and hence why I believe that is an outlier to the norm. But the chart on the right, I think, is interesting. It shows, Alpha Metals X, which are two of the well-known names, the producing names in the sector. Good quality assets. And it really just shows the arbitrage of what First Tin can do, and the other private companies, Cornish Metals, Afritin, and Stella. If they're able to show to the market that they can move from a developing phase to a production phase. And that's very much the aim of what we're trying to do over the next 12 to 18 months, is to show the market exactly that this is a company, and this is a set of assets that will end up being producing assets, not just development assets. And if we're able to do that in the next year or so, then that arbitrage will significantly reduce, and we'll end up on a much higher EV per ton tin ratio. So the summary of the shareholdings, we have Austin. We acquired the Tronga asset from Austin, so they became our largest shareholder as part of that transaction, the IPO. Baker Steel, a well-known resource investment company, is our second largest shareholder, and directors, when you see directors, that really is Thomas and myself, owning a very large percentage in the company. We invested a lot of money to get that 8.5%. In fact, probably our in price is a premium to where the market is today. Not probably, definitely. So, we are very aligned with shareholders, very, very committed, have a lot of skin in the game, and feel, that the current price is certainly not a reflection of what the company, the real value of the company's underlying assets. So, sitting here today, I mean, at a 15 million approximate enterprise value, we feel significant upside if we can deliver in the next 12 months on what we're aiming to do.
Yeah, so thanks, Charlie. So leading to the summary of our presentation. So we presented you what we have achieved so far, as well as our plans for the next 18 months, and even looking forward to 2025, the year when we plan to put both assets into production. So we are really in a good position to enter the market where still the supply-demand gap is still very wide open, and so it's very wide. So we are perfect positioned time-wise. We have mature projects, and we aim to do as well ESG compliant assets in tier 1 jurisdictions, which is a major difference to most of the tin miners, which are mainly sitting in Malaysia, Indonesia, China, Congo, and only to a lesser extent in Australia. So there is a substantial gap in ESG compliant tin supply. We will exactly jump into that gap. We are fully funded to develop our 2 projects forward to become them investment ready until end of next year, and even more as well. We can finance substantial drilling programs for the assets itself, as well as to expand the actual resource statements. We have commenced the DFS studies, and we plan and feel in a position to finalize that as well until end of next year. We identified a very low capex case for both projects, so an executable kind of situation, and we will take care as well that will remain that way. And we have put in place a very, very strong operational team and board, which enables us to develop both projects in parallel to become investment ready. So in a nutshell, we promised a lot during IPO and marketing and fundraising at the beginning of this year. So far, I'm in a position to tell you that we are in line with our promises, that we are in line with our plans, and that I can't see so far, and I have not identified any red flags that we can't achieve to become those assets investment ready until end of next year. Thank you very much.
Fantastic. Thank you, Thomas, Charlie. Thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions just using that Q&A tab just on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Thomas, if I may just hand over to you, just to click on that Q&A tab, and just where appropriate to do so, if you could just read out the question and give your response, or direct it to Charlie, and I'll pick up from you at the end, that'll be great.
Yep. Thank you very much. Thanks, Paul. Will do so. So I have one question. I will read it first, and then I will answer. The question is, assuming all projects run to plan, when will the company first produce cash flow sufficient to cover running costs? I promised during the marketing, and as well I explained during the presentation, that we plan to put both assets into operation during 2025 if all plans will turn out like they are, that means the cash flow to cover the cost we will generate first in 2026. Next question. Economics of the projects, will you look to bring them on stream in tandem? And what is the strategy for funding production? So far, we develop both projects in parallel because looking onto the topics to be solved, and here I mean to execute the DFS studies for both of the projects, as well to finalize the permitting application and to receive the permits. So far, it looks like both projects can achieve the same timetable to become investment ready. If it will really turn out like that, the next 18 months will tell us, because there we have as well a number of partners in the process. And once we have identified if that will become really the case, we will define potentially with which one we might move first and which one will become the second. But the process will tell us that. We can't decide that yet so far. And the funding will most probably become a mix out of equity and debt financing. The strategy to fund that we will develop during the course of the next months. Next question. How do you explain the disastrous fall in the share price since the IPO? If we go back to the slide that Charlie explained, that shows the share price development for First Tin on the left-hand side, as well as a number of other peers developers, as well as companies that are already producing tin, so generating cash flow. There, one can state that basically the share price of all of those companies followed the tin price development. So we have seen a tin price peak, if I remember correct, around the 4th of March, peaking nearly $50,000 per ton of tin. And since then, it dropped, reaching something like a plateau around 2 months ago in the region between $20,000 and $25,000. And since then, share prices as well as our share price moves sideways. Next question. Are you impacted by supply chain issues? And if so, will this have any impact on the timelines and news flow for the project? So far, we are not impacted by supply chain issues because we commenced and awarded studies as well as drilling program. One can expect some impact later on. We will identify in particular the potential lead times for major equipment parts during the course of the DFS. So I expect that the supply chain issues will be reduced during the course of the next months worldwide. So hoping to be exactly at the right time when supply issues and questions are closed. Today, I can't answer it really in detail. It's by far too early. Next question. Do you expect to be able to command a higher price for your tin as a consequence of your more environmentally friendly approach to producing it? Well, looking into the past, there is no one commodity, neither tin nor any other, that has a quality premium in regards to environmental friendly production. One exception, just during the course of last week, a first copper producer Brixleck in Austria aims to introduce a premium for ESG compliant produced copper. Be sure that I will monitor very closely the way that that premium will become introduced. Nevertheless, one might expect that that potentially can happen, to have a premium for ESG compliant production, because it might lead to higher costs attached to ESG compliant production. So far, no success case for any of the commodities visible. Has there been any specific hurdles that have come to light since IPO in either project's development? No, we don't have identified any red flags so far, and we are still confident to deliver against our schedule promised during IPO and marketing campaign, so to get those projects investment ready until end of next year. Are there any EU initiatives that you will be able to access? We followed it very closely, the EU initiatives for raw material supply, for critical raw material supply in particular. There is no proof, neither a guarantee, that we will become access, but we are listed and we are a member of the European raw material initiatives, where in particular the critical raw materials are closely monitored. So if there will become something available, we will try to become part of that.
Thomas, thank you very much indeed. You've actually answered every single question we've had through. And of course, if there are any further questions that come through from investors, the team will be able to review those, and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Thomas, just before redirecting investors to provide their feedback, which I know is particularly important to you and the team, if I could just ask you for a few closing comments, please.
Yeah, thank you very much. Happy to do so. It's my pleasure to do so. First of all, thank you very much that you listened to our presentation. Second, that you stayed or became our investors to develop First Tin to become one of the very rare ESG compliant tier 1 tin suppliers for that particular critical raw material, which is really the enabler. Charlie called it the spice metal. It's the enabler for the energy transition, for electromobility, as well as electronics, where it is unfortunately most often forgotten, but it is the enabler. So thank you very much for staying with us. And I'm looking forward for further questions and hopefully as well to meet you soon at the one or another occasion.
Fantastic. Thomas, Charlie, thank you indeed for updating investors today. Can I please ask investors not to close the session? You should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. It'll only take a few moments to complete and is greatly valued by the company. On behalf of the management team of First Tin PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good morning.
Thank you.